We have the tech sector trading down more than 2% this morning, according to the XLK. That's a commonly used tech ETF. And what's the culprit? Who's the culprit, folks? It's AI. It's OpenAI. OpenAI, a WSJ report, the CFO showing some concern the company can hit some funding targets if it can't hit its sales contracts, and we have a tech wreck on Wall Street here this morning. We're going to get into a little bit of an open AI watch list. We did an Anthropic watch list a couple weeks ago on air. We'll do an open AI watch list, although it's pretty much just all of tech. Why today is the anti-open AI trade, bank strong, staple strong, drug strong, utility strong. Triple D's got a little trading idea here for y'all, and I'm going to tease it and not mention it, so you have to keep tuned in. Kramer last night calling Rocket Labs a winner. We are in the heart of the earnings season, folks. We got Triple BY, Bed Bath & Beyond last night. We got Rambus. We got Celestica, General Motors this morning, along with Corning. Tonight, we're going to get Robinhood, Bloom Energy, Seagate, the earnings parade. Let it go on, folks. Our guest today at 8:35 a.m., David Russell, head of market strategy over at TradeStation. Folks, it's Tuesday. Yes, we missed Joel, but the show must go on. Let's get it going here on Pre-Market Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. Thank you to TradeStation, sponsor for our charts on Pre-Market Prep, born to trade. Chart, customize, analyze, all in one platform. Notice, folks, that I'm starting here with the chart of the XLK. I think it is important to start with tech here on this tech wreck of a Tuesday. Let's go to the SPY, trading down a little over 0.5%. You can see oil trading down, trading up here this morning, 5%. We'll stop by gold and see what gold's doing here this morning, trading down more than 2.5%. SLV down 4%. Around the horn, folks, and the last stop on Around the Horn is usually Bitcoin, trading down 0.9% here this morning. Let's check in on the Triple D trader, trading away, I'm sure.
Yeah.
How's your morning going, Dennis?
Getting dinged here, a little bit too tech heavy here with my overnights, but we'll manage it. We'll work them out, and I'm sure it'll be okay.
Look at that positivity. I like it.
What you got to do is stay positive. We all have little mornings where we get a little bit hit, but I'm blaming Joel for all this because
of course
Joel,
you are.
Vacation indicator, correct, Tiny. Once again, it works. He goes on vacation and the market gets hit. Well, actually not exactly, because he's been on vacation for a couple of days and the market,
it's just lagging.
Highs yesterday. But boom. So OpenAI, we can blame OpenAI for the sell-off. We can blame oil for the sell-off, but we truly know down it's probably Joel that is to blame for the sell-off. So this is the thing that a lot of people are talking about this morning. Obviously, people talk about oil, and we can cover oil. And oil being up, USO being up $5, making almost new highs on the year is not a good thing for the market. So that's putting pressure on the markets. But this is really hitting the tech sector here. So you get this WSJ article that you have on the screen here right now. OpenAI, I'll just read the title and you moved it. Misses.
Yep, here you
Key revenue, user targets, and high stakes sprint towards IPOs. So the company CEO and board, still reading there, Brunster, as you move around. I got to go back up because I'm reading from it. Company CFO and board have questioned the wisdom of massive data center spending in the face of slowing growth. Well, none of that sounds great. And, everybody's ramped up on the AI trade, including myself. So, I mean, when you see this, you're like, oh, is it over? I wonder how much of this. So read us a little bit more there, Brunster.
Yeah, so CFO Sarah Fryer telling other company leaders that she is worried about the company might not be able to pay for future computing contracts if revenue doesn't grow fast enough. And this is like It's just crazy, this sentiment in this space. If revenue isn't growing fast enough, we're talking about a space that has grown revenue faster than I think any other industry in history. And there's still executives from within the industry are still talking about, revenues are not growing fast enough.
Because the spend is just huge. And, that's what it's about, keeping up with the spend here.
Yeah.
So, I mean, this is wrecking stocks this morning. Number one stock, which obviously is closely linked with OpenAI getting wrecked here this morning, is probably Oracle.
Yeah.
Oracle's had a hell of a run. We've talked about this hell of a run. I've got a small position still in a long-term portfolio, legacy position, and it's been just, a really bad one there. Oracle moving down here over 7% here this morning. 3 days ago, this topped at 189. Now it's 161. So it's given back over half of its gains from the last month here now. Just like that, like bang, 3
Just
days
like that.
it's gone. Yeah, it's software. It's hard to be there, but this tied very much so in with OpenAI. I know Microsoft's been tied in there for a while too, but it's kind of separating itself. Even with the headline yesterday, it's not as tied in, but it is down 1.11% as well. Obviously, OpenAI isn't publicly traded, so we can't look at that. We can just look, at some of the other stuff. RVI, I believe, has some indirect exposure. I'd have to go and research that. The Robinhood Ventures Fund. Like, I know DXYZ is the Anthropic. I don't know who has OpenAI. Like, obviously, some of the major companies, but is there any fund? I think RVI might have a little piece of it because it's down 8%. I'm wondering if that's what it is.
Should we ask
OpenAI? Really up a
OpenAI?
lot yesterday, so that's giving it back a lot. That Robinhood Ventures Fund. This fund, if you don't know it, invests in private companies. I think they might have a piece. If somebody knows, let me know.
The way you said it, I think last week, Triple D, is they cannot, I don't remember what the exact moment was, but he said they cannot punish this company because it's not publicly traded. So they're punishing companies that are publicly traded. Are you asking OpenAI right now if RVI has exposure?
No, I was thinking about going and doing that, but I was hoping someone in the chat might just do it. I was reading the chat comments there. Yeah.
Chat?
Who has, let's go find out. What public ETFs have OpenAI exposure? You gotta love AI. Let's see if there's any.
Today's the day you would say that while it's listening.
AK has some of their flagships have gained pre-access, so they have it a little bit there too. There's a few indirect plays that are deeply integrated. These are ETFs. They're just talking that, obviously. Okay, so yeah, RVI, a closed-end fund that recently added OpenAI as its top holding. So RVI is your OpenAI way to, now RVI has other things in it as well, but there you go. So I was guessing it because it was down 8.5%, and it absolutely right. They have OpenAI exposure. So like from obviously pre-IPO exposure here. So RVI, that's the way. If you positive OpenAI headlines in the future, think about RVI. You get the negative ones. Think about RVI. It's down almost 10% because it's not a good headline for the Wall Street Journal. From the Wall Street.
What about, we had Kirk in the STN chat, one of our really smart users, community members in the STN room, pointing out CoreWeave and Broadcom, also along with Oracle here this morning, getting the beats. Let me see what the CoreWeave chart is looking like here this morning. CRWV.
There's a lot of things getting the beats.
Yeah.
CoreWeave down 7%. That one's ugly here too. I mean, you can just go through. We got a full-on tech wreck.
Real quick.
Some of this started with the earnings last night, but man, at CoreWeave, absolutely. So I think if you're putting on your list, like we always write lists here. You want to think about 2 stocks or 3 that have OpenAI exposure. I'm going to do it right now. Right.
I'm going to do it right now too.
OpenAI exposure, RVI, Invest, Oracle, and CoreWeave. I'll put all those at the top of the list. Now, all tech, to a certain extent has it, being that's why we're having a tech wreck here today. But you want the ones that are going to get hit the most? It appears to be Oracle, CoreWeave, and RVI. If you have any other ones to add to the list, please let us know here right now in the chat because we're just compiling these lists.
I think
all of the tech earnings were down here too. So this is not just OpenAI's fault. We got a tech wreck going because all the major tech stocks that reported last night and this morning are getting hammered here as well. We're talking about Rambus, Celestica, and GLW. They're all very ugly here too. I don't know if you want to go to that here right now, but let's tie it in here. So last night, we warned about this in the STN room because, I have my Micron swing long on. I'm like, some people are thinking about taking profits. I was like, you have a risk here because you have Rambus reporting, Celestica reporting, GLW reporting. I mean, all this is tied in with tech, and all tied in with the AI trade. So if they, really get hit, and the bar was high for all these companies, you could see, Micron come under pressure here today, and that's what you are seeing. And you could see some of the other tech names come under pressure. It's been an incredible run. So, maybe there's a pause here. Is it over? Is the story over here? I don't think so. I don't even think it's close to over. I think we're still in the early innings. But right now, Rambus, let's bring them up. Give us the earnings here, Brent. I'm going to break down the technicals here.
Awesome. So the earnings were mixed. They missed on the bottom line. They reported 63 cents. Analysts were looking for 64, 65 cents. Sales coming in at 180 million. That was a beat versus 178 million estimate. Slight beat. They gave some guidance, but I want to get a little warning here on Rambus and in general as we're going through the earnings season. Their guidance wasn't really comparable. They didn't give a total sales figure or an earnings per share figure. They gave a product sales figure, but analysts don't explicitly give product sales estimates in this way. So I've seen a couple sources that are saying they gave some Q2 guidance, and the Q2 guidance was worse than expected. That's not a comparable figure. So just a little heads up there. We don't really have a clean comparison for Rambus Q2 sales.
Okay, ugly chart. So this is stock. Just giving you a perspective here. If you could go at the chart a little bit further.
Yeah,
we started before April
daily?
at $77. This stock just went on and doubled in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 days. The stock goes from $77 to 160. You're buying on 140, at 150, at 160. That, my friends, is the definition of absolutely chasing. And when the chase ends, everybody runs for the doors at the exact same time. We had an ugly reversal ahead of the report yesterday. Maybe people taking profits ahead of the report. And this is a trading strategy in itself. So listen up to you guys who are day traders, short-term traders, swing traders here. When stocks have incredible runs, where they're up 100% 3 weeks prior to the report, sometimes the day before, you start getting profit taking because institutions are like, I'm booking these profits because I don't want to go through the print. So we could see the sell-off yesterday ahead of this report here on Rambus, because the move's been incredible. Now, it doesn't always work. Nothing works 100% of the time, but 60% of the time it works every time. Just kidding. That's not true, Anchorman. But, so it sells off 20 points ahead of the report. Then it reports, and the report just didn't blow us away. It wasn't bad, just didn't blow us away. And now we get back another 25. So the stock doubles in 16 days, and in 3 days gives back 2/3 of those gains.
Yeah.
And that's incredible. So what I will say is, do your homework on Rambus. I don't follow this company closely, but I might go do some fundamental research. And I just put a question mark. Am I going to buy the dip on this one? Maybe potentially buying the dip. We'll have to look, and I want to go into details on the business here. Like, I think Rambus is mostly hardware, but I don't know closely enough, so I got to do a little bit more homework here myself. I'll do that in the STN think tank after 9 o'clock and decide if I'm going to buy the Rambus dip or not today. But I mean, buying tech on dips has been working, not software, though. So we got to make sure there's not a lot of software in there.
Buying tech on dips has worked, but there is some separation a little bit happening. We saw what happened with Qualcomm yesterday, right? A couple users in the STN room yesterday were asking what's up with Qualcomm, and I'm like, I think that the market is just showing a bit of its hand that it won't just accept any tech.
Yeah, it's fussy.
And is Rambus a case here? I don't know, but maybe. Yeah, maybe.
Well, it is. It's picky, and it's got its loved stocks. Qualcomm, I thought it was going to pull back a bit from the 167. I didn't think it was going to give it all back. That is crazy. I even said if it pulled back to 150, I might even buy more. I did not. 144 here this morning. It's ugly. Would I be interested in buying the Qualcomm dip? I think so. I think it's a sneaky hardware play, and obviously, we talk about yesterday was a headline that OpenAI was getting potentially into cell phones, and now you get OpenAI. Almost a warning from the Wall Street Journal. So now you could tie in Qualcomm probably onto your OpenAI list. So Qualcomm's even going down. So I'm going to add Qualcomm into the OpenAI list here now too.
Yeah.
So we'll just add that stock, and it's down more than the market as well. Like, I think if you're selling it now, I mean, it was 167. You want to book the profits yesterday, 165, 160. Sure. Now you're selling 144. I don't know. You got lots of support down here. Maybe Qualcomm's has been hated for a long time. It's just not the best stock. I've been in it for like a decade in my long-term portfolio. Probably just going to continue to hold on to it. I'm in from like $49. I think Sean Udall brought it to us like 7 or 8 years ago.
Wow.
It hasn't been, really, it's probably underperformed. I'm up like 200%, and it's probably still underperformed from where some of the other stocks have been 7 or 8 years ago. But it's been okay. But overall, it's been a laggard. And the market has its loved stocks, its hated stocks. Qualcomm just seems like every time it rips, it's a selling opportunity. So, I probably just should have looked at it just, blindly like that they just don't like this stock.
Let's keep earnings going here. We'll stop at maybe 1 or 2 more from last night and talk about a love stock, Celestica here. Last night reporting their earnings, they reported a fine quarter, $216 in earnings. Analysts were at $207. The sales beat over $4 billion. Analysts were under $4 billion. The guidance was kind of like in line to a little better than expected. Q2 sales expected 214 to 234. Analysts are down around 215. And then they also raised their 2026 guidance, and they raised it pretty substantially. I was pretty excited about this 2026 guidance in the STN room when we were breaking it last night. They're raising their 2026 earnings guidance from 875 all the way up to 1015. Analysts down under $9. Nice beat for the quarter, fine Q2 guidance, and really strong fiscal year guidance. And shares here this morning caught up in the tech wreck, down 12%.
Yeah, same thing. Wrong night to report, wrong morning to report here when we got a tech wreck going on here. I think, we ran up into the report here too. And unlike Rambus, this didn't sell off at all ahead of the report. They're almost close at the high tech. So it didn't have the kind of run that Rambus did either, though. Like Rambus had run up, like we said, 100% in 16 days. This was up like 25% in 16 days. So, it's been a big run, but nothing like the Rambus one.
Yeah.
So, you probably got to look at the scale of that. But pull back. Boom. Okay, we'll just give half of it back. So we just had a 16, 17-day run with stocks at 25%. Let's give half of it back in one day. I like my 50% retracements. I like being in stocks here. Like, would I consider buying the Celestica dip today? Yeah, I would. I would consider buying it. I've got to do more research. Again, we do that live in the STN Think Tank where I talk it through with our, traders who are in there. There's great traders in there. And think about, maybe, so you put it on a list, question mark, do you want to look at buying this dip today? Sometimes it's just like, no, I'm not doing it. Sometimes, yeah, I'm doing it. Sometimes I'm like, I'll talk about it and think about it. Maybe it's going to come out, yes. Maybe it's going to come out, no. But at this time here, I don't know. So it's one that I would put on the watch list to research a little bit further.
Yeah.
Buying, hardware stocks down 13% in a market that really likes hardware is probably not that bad of an idea.
And kind of tongue in cheek, I said, caught up in the tech wreck, but we should be clear that Celestica was selling off despite this report like last night. This bar right here is right when it reported. So it already was falling, and it didn't even really rebound at all last night. So maybe not fair to say that it's caught up in the tech wreck. I think it
was already doing its own tech wreck last night.
Exactly. I think people were just kind of eager to sell it anyway. You want to do one more, the big mover from last night, Bed Bath & Beyond? You want to skip it?
No, it doesn't get any love at all. Sorry, you BBBY traders. That's not getting any love. And we're not even going to go to Nucor. We're staying on the tech theme here because we're on so long. We got our guest, obviously, from TradeStation coming on at 8:35 here, too. GLW.
Okay.
Is the other one that I had on my list here from the tech wreck here this morning. And this is absolutely the wrong morning to report. You got OpenAI warning. You have a lot of things. GLW is definitely hardware. The glass maker goes in all your iPhones, goes in all kinds of different hardware names. Corning down 19 points here this morning. Ignore that tick that just went off at 177. That is an old print. A lot down 11% here. 168 it closed at, is trading at 148, giving back pretty much the entire April rally.
And, we like joke about, we don't, it's not a joke, but we joke about, not reporting on the right day. And of course, Corning has reported around this day for 20 years or something like that. So what are they going to do? Cancel their earnings report? Like, okay, we got it scheduled for Tuesday morning.
No, they're not doing that.
Oh no, it's a bad day to report. Let's cancel it. No,
you just as traders got to know that though. So you're looking, okay, well, we got a bit of a tech wreck about OpenAI. Would I, be trying to get out of GLW ahead of the report this morning? Yes. It wasn't maybe given, but if you 4 a.m. traders are out there buying GLW ahead of the report, you got to know kind of where we are. So, it matters. Yeah. The bar matters and the day matters, sometimes more than the report itself. High bar, wrong day equals big losses for GLW.
Here is the quarter. They reported 70 cents, a penny beat versus a 69-cent estimate. Sales beating 4.35 billion. Analysts were around 4.3 billion. Guidance was in line. They're expecting Q2 earnings 73 to 77 cents. Analysts are at 75 cents. Sales for the quarter also right in line with estimates. 4.6 billion shares this morning here, trading down about 12%. And just keep in mind, yeah, we're trading under 150 here. But I mean, zooming this chart out and looking at the daily chart, even with the pullback here today, the stock is still, almost doubled since beginning of January.
It's been an incredible move as well. So big moves here. I mean, this is like still glassmaker. I mean, we gotta have perspective here, and it is, you can trade anything. I don't care. You can chase, you can do anything. You just got to know where your out is. But investing in stocks that are trading up 100% 3 weeks, investing in stocks that are trading up 100% 3 months. So they're chasing, man. You're chasing, and you know what? Chasing works sometimes. It works well in bull markets here too. But you just gotta, have your outs. And do you want to hold it through a report? After it's up that much, the bar is super high. So GLW, whoever sold it off yesterday. So again, same thing. Rambus. The stocks really had a hell of a run, up almost 100% in the last 3 months. And yesterday a little bit of profit taking out of the report, because if you're a trader and you're sitting on all these gains, do you really want to hold it through the report? Probably not. So that's where we're at. Is wrong day. Report was fine. Doesn't matter. We got UAE deciding to exit OPEC. I don't know what that headline is. Thank you, Street Insider. But USO is flying around here right now. Actually leaking a little bit here at USO. We just like to give you the breaking news as we go. SPY has continued to drift down all day here, but USO, if we just go to that, intraday chart, you're on the daily there. But if you go to the morning chart, you'll see the little sell-off that I'm just talking about. We just started to leak here just on that headline a little bit. You see the little spike down there? Yeah.
Yep.
Yeah, sure. USO was up all morning, so that's good. That can be good for obviously the S&P as well here. But I firmly do not believe that the S&P is down because of oil prices this morning. There with the macro, that's what's going to tell you. They're going to come in, and all the media is going to say, yeah, oil's up, that's why the market's down. No, it's not. It's the OpenAI headline. So totally. I think if oil was up $5, I think the S&P's not going to like it. But I don't think, you're selling off this much without that OpenAI headline. I think you got the tech wreck happening here, and that OpenAI headline is spooking traders here this morning.
And remember that there's opposition to these moves. Like, if we're having a tech wreck here this morning, we're going to have strength in banks. We're going to have strength in staples. Yeah. We're going to have strength in drugs. We're going to have strength in utilities.
Yeah. It's continued rotation. It's continued rotation here. We see banks up. We see staples up. We see drugs up. We see utilities up. We see oil stuff. We see value. Berk.B, look at Berk.B, bring it up. It's up 0.9% here this morning. Because if you're selling off all these tech names, you move it right into the value names. So we're going to have a sneaky value rally today. AT&T and Verizon are having great days here this morning. McDonald's is up over 1%. So this market isn't a sell-off of everything. This is definitely not. I would argue I've got 200 S&P stocks on my screen. I bet you 100 of them are green. Yeah, for real. I bet you 100 of them are green here right now of my 200 that I've got on my screen. And it's banks, it's drugs, it's staples, it's the value names, it's oil stocks are all trading higher, obviously, with oil here. But there's a lot of stocks that are going to be surprisingly green here today. Not your tech stocks, but look at Costco. Costco's trading up 1% here this morning. Why? It's defensive. Walmart trading up 1%. Why? It's defensive. Coke, which reported earnings, which we could get to. Absolutely right day for Coke to report. On a defensive day. So maybe we should go to the Coca-Cola report here, because there's reports earnings this morning. People say, oh, it was a great report. Also a great day for them to report, because when the market is like getting hit and tech is getting sold, they're like, what can we buy? They always fly into Coke. So defensive.
It was a nice report. It was nice guidance, but I think I'm leaning on your sentiment there that this is just one of the better days Coke could report. They reported 86 cents, a 5-cent beat. Sales 12.5 billion, beating the 12.3 billion estimate. They raised their 2026 guidance modestly. They raised it by about 3 pennies or so. Prior guidance was 321 to 324. They're raising it 324 to 327. Analysts are around 323 shares here this morning, trading up about 3%. I forgot what I was gonna ask you about Triple D.
Maybe it's something else with staples. The whole rotation trade, though. So again, just knowing the rotation and understanding, because, if you're newer to the markets, you might just be like, well, like stocks go up, stocks go down. They're all about relationships, and they're all about some stocks going up and some. You very rarely in this day and age, years ago, yes, all stocks kind of move together. But this day and age, it's all about which stocks, what's the market's doing. The sector rotation is real. You very rarely see 99% of stocks up. You very rarely see 99% of stocks down. You see this rotation happening where algos go from one sector to the other depending on what is going on. So automatically, when you see an OpenAI headline that's going to hit OpenAI stocks, you might say, okay, I want to short all these OpenAI and these tech names. And if you can be really quick, that might be. But the slower trade and the people that don't adjust to it quickly is actually the opposite, where, oh, this is good for staples. Let's go buy some staples. And I bet you on those headlines, it gives you a few minutes. That trade isn't instantaneous because those algos aren't that smart. You have human beings coming in. Now they will get smarter. AI will be trading these markets and continue to get smarter. Maybe eventually takes away all of our trading opportunities. But, right now, me as a human still do pretty well because I understand the relationships. It's not because I understand the technical analysis.
We do have David Russell in the background. We're going to get to him in just a few minutes. I want to ask you two things, Dennis. Do we want to preview any earnings for tonight or tomorrow? Second thing,
I want to do a couple more earnings trades, and yes, we will do a quick earnings preview here too. I just want to do Spotify here as well, because Spotify is stock that sometimes moves opposite the market. That is not happening here on this report. So I want to dig into the earnings. What did Spotify say here? I think they missed revenues. And I like it when they miss revenues, especially when they trade at nosebleed valuations.
They did miss revenues. And then to your point, the Q2 sales guidance also missed. I'm seeing earnings over $4. Analysts were around 370. I see about 5.3 billion US dollars. And analysts were about 5.4 billion. The Q2 sales expected 5.55 billion. Analysts up around 5.65 billion. So kind of a substantial miss there for the Q2 guidance. Shares here this morning trading down about 9% or so.
Why can't this be heavily disrupted by AI? Why do we need, isn't you're going to have your own AI? They don't think there's people out with the open clause just creating a Spotify. Doesn't this not seem like a pretty easy thing to create? Or is it a matter of not being able to get all those songs easily, with red licensing rights and all that? I'm just trying to think. Basically Spotify is just a playlist of all the songs that are out there, and creating playlists and listening to music. Why the hell can't AI do that? I'm just looking at it and just thinking there's no way this doesn't get disrupted.
I'm
thinking out loud here.
Yeah. And I have a couple thoughts here. And we didn't talk about we were going to talk about this or anything, but I have a couple thoughts off of my head. Maybe it already uses AI so much, like Spotify has been generating playlists for people using a form of AI for, maybe 10 years now.
Sure.
Also, the second thing, anything that is attached to an artist has just been a little bit off limits for AI. And Dennis, the way that you said, why can't Spotify disrupt it? It's just putting playlists together. Dennis never mentioned making music itself, which Spotify is not doing anyway.
Yeah.
But I think that's kind of the connotation where something that is much more closely related to an artist, where we know the community has been pretty aggressively against AI. I feel like the market just hasn't really gone for those names yet. What do you think about those two? Theses?
I think there's a lot of things to think about there. It's also the Netflix and Spotify, which often do trade together to a certain extent, is quite different from what you just said, because Spotify doesn't actually create music. Netflix creates content. So there's a big difference between those two. Content creators are still needed. AI is going to create a lot of content too, but people want good human creations too. I mean, over on Stock Trader Network, we're creating, Money Mitch is doing a fabulous job with her education, and he's creating AI content because, we're only a team of 11 people. So, it's hard, or 10 or 11 people. I haven't counted up how many people we have working there now. But it's hard for me. Like I said, I want more education there, but I can't create thousands of hours of content. I just don't have the time to do it, to speak it. So what Money Mitch is doing for us, which is awesome, is he's going through even old pre-market prep shows and stuff. And when I teach about something, he's having AI do this. We're pulling the content out, and he's creating like AI presentations, AI, agents that can speak about this stuff and teach. And I mean, that's cool. So we're creating AI creations, but it's not perfect. Like we were saying, like NASDAQ, when the video, it's like saying NASDAQ, the AI agents say NASDAQ because they're reading it and they don't know how to say NASDAQ. They're going to get that, but you can clearly see right now what content is created by AI and what content is created by humans within a few minutes, of listening to a podcast. It's not good enough yet. I think it'll get there, but it's not good enough yet. And that's right now good for Netflix because, it's constantly created by AI. People don't really like it.
Exactly.
So, I mean, it's exactly even on articles, it's like AI, this article was not generated with AI. It's written on the bottoms of the article. Somebody's actually written the article. And it does really good. I mean, some of this articles AI is writing is really good. But people want to read human content. People want to listen to human content. So, I think they'll accept a certain amount of AI content. But I do think there's going to be pushback there, not only from the industry, but from users to not just jump into everything AI and AI replacing humans on every level. So I think that's okay for Netflix. But in the Spotify case, which is where we started, they're not even creating content. They're just putting together playlists for the most part here. So I'm not buying the dip on Spotify here today. It might rally up. It sometimes plays defensive. It's not crazy valuations of 35 to 40 times forward earnings, depending on where your estimates are. But I do think disruption for this industry, for Spotify, is real. So I'm just going to stay away.
In the STN chat, a couple of our awesome users kind of throwing their hat in the ring here for this thought. Kirk saying Spotify deals extensively with both royalties and music licensing. It's a core part of how their service operates. Unsure if that itself could be disrupted. Felicia saying Spotify makes great use of AI. It's such a monster. Barat saying he uses Spotify every day. It's the best app. So I don't know. Polarizing here. I wanted to get to, we're going to go to David Russell here in a sec, but I wanted to get to a trading idea that you set up. I'm teasing it right now, Triple D. We're going to get to it. I think after.
It's going to be a long conversation, so we're going to do it after. Tease it right now. And it's not me. Money Mitch actually gave me this idea. So if you're following our Twitter accounts, you're probably going to know. And I just want to go into more details on it because I think Money Mitch makes a fabulous point there too. So if you want to listen to Money Mitch, he's 7:30 every night on the STN think tank or in the STN think tank. But let's go to David right now here because he's waiting and he's rearing and I can tell he's ready to go. So let's go grab David Russell.
Right, here we go. Good morning, David Russell. How you doing today? How's your week going?
Oh, it's going great. Good to see you guys.
Good to see you too. Thanks for coming on here today on this Tuesday. You are head of market strategy over at TradeStation. Let's get into a little bit of the markets here. Triple D, where you want to start with David?
Well, we'll start right off the bat because, this has been an incredible comeback story for the market, especially the NASDAQ. I mean, we go back to 3.5 weeks ago. The S&P was down almost 10%. Oil prices were skyrocketing, and, it looked like the end of the world was near. People were talking about nuclear war for crying out loud. Now all that is forgotten. The S&Ps have come all the way back, rallying back, and we're making new highs. Tech, has led the way. The AI trade has led the way. The Qs have went since, 1 month ago, literally like almost to the day. If we go back, the lows were made on March the 30th. So if we go back just 1 month ago, the NASDAQ hit 555. We're 655. So we were put on 100 points on the Qs literally in 1 month. David, what do we do now?
Okay, well, I would say really quickly off the bat that one of the things that was happening was we had two of the most extreme kind of good and bad at the same time. We've had extremely strong earnings coming into this reporting season, and they've remained, for the most part, pretty strong from what we've seen so far. And then we have an existential, life-threatening event in the energy market, and these are two completely different forces happening at the same time. And the market pivoted from the worst case to the good news, and now that's happened. So where are we now? Well, now we're at a spot where I think is it basically the energy reality is coming back. So on one hand, we have certain negativity with this OpenAI headline today. But then on top of that, we also have like it was Corning, I think, a little bit of light guidance, and these fiber optics have been a big part of the AI data center trade.
Totally.
So this is coming together, and so I think right now, the big thing that's kind of standing out to me is we have the Fed meeting tomorrow. No one really expects it to be particularly meaningful. However, Fed meetings can often be moments of pivot and kind of gut check and come back to reality. And I think we have a situation here where yields are squeezing higher. There's a level that I've been watching on the 10-year Treasury yield really for years now. It's right around 432, which was the peak in June of 2008. And we've been basically squeezing on either side of that. And I think here we're in a spot where when you look at what's happening with energy, you look at just the overall state of the economy right now, we're looking at, I think, potentially yields making a run higher here and starting to kind of have that move. So I think right here, I'll also point out, if you look at the TLT, the bond ETF, that has a bear flag developing. And it's had a very tight range. If you look at the Bollinger Bandwidth on bond prices, yeah, if you look at the bond, look at the TLT, I don't know if you can quickly throw up a Bollinger Bandwidth on there, but it's had a very tight volatility squeeze. And if you look at that price action in the last few weeks, it's turning into more of a sort of bear flag of price, which would imply upside to yield. So, and then, yeah, so I mean,
I want to stand there. I don't want you to go away from that point here because nobody's talking about yields right now. Everybody's talking AI, everybody's talking war, everybody's talking oil. But I mean, I look at this and I'm looking at this chart here too. And usually when even, you don't have to worry about the Bollinger Bands or anything like that, just consolidation station at the lows when stocks stop, and they're just sitting here at the bottoms. They don't usually give you, Guy Dami always says the same as he's absolutely right. They don't usually give you a month and a half to buy the bottom. They don't usually give you that much of an opportunity. Usually when they consolidate this long, they're going lower. I mean, if TLT starts to break down, if long-term rates start to go higher here, David, what does that mean for the markets? Can the markets shrug that off, or do the markets start to get concerned about thinking, like rates, longer-term rates higher again?
Well, I think, we're looking at essentially in that case, energy benefits. And, you talked about Spotify earlier. What I would say with Spotify is it's a long duration growth stock. And the way to think about a lot of these things right now, software and a lot of these kind of media kind of companies like Netflix or Spotify, these are long duration growth stocks. They don't have hard assets. They don't make stuff the way the semiconductors do. We've had a massive rally in these hardware companies, and those are not necessarily I mean, just because they're all tech companies doesn't necessarily make them, the same here. We've seen a huge split between hardware and software, and that in many ways can remain in effect. So my point is, if yields move higher, that is, potentially very negative for the long duration, high multiple stocks. We're talking about, Microsoft, Oracle, those come back into play. But then at the same time, some of the hardware makers, they can kind of bifurcate here, as we've seen. But I think ultimately here, we're in a spot where basically, we took this hit in the energy market, and then people said, all right, and then we came back from it for a while. But the fact is that there's still, every day, we're losing something like 10 million barrels of oil. And I think that's essentially something that is now starting to catch up with us here. And so we have, what I think is interesting is we have the Fed coming here, which gives that opportunity for us to revisit rates and revisit where we are in terms of yields. And the dollar here is holding some long-term lows. And then at the same time, we have the energy thing all coming into focus. And then who reports on Friday? ExxonMobil. So I think right here we have a spot where some upside call spreads in ExxonMobil could be actually coming into focus as a potential strategy.
Oh, well, that's interesting too, because when we look at the USO and we look at oil prices, they're almost at their 52-week high here right now. Yet the oil stocks in themselves are significantly off the 52-week high. XLE is down over 10% still from the highs. If you go into ExxonMobil, it's even more pronounced. ExxonMobil hit 176, it's trading at 150. I mean, you're talking about stock 26. I mean, it's back. ExxonMobil is trading back to the price it was trading when the USO is down at $80. So there's a disconnect here. It's obviously, the belief that, that oil futures aren't going to stay elevated because the USO is just made up of oil, short-term oil futures. It's the belief that oil futures, eventually are going to come back in, because if oil was to stay up here, ExxonMobil is going to make a hell of a lot more money. So, I mean, maybe there is a disconnect here to take advantage of.
I think there's a massive disconnect. And anyone you look at would say that oil futures are way below where they should be based on the physical markets. And we've seen this for a while. And I think the thing is that we've never had to deal with a scenario like this. But ultimately, here we're in a spot where in the coming weeks, we're going to start to see real shortages in different parts of the global economy of energy. And once it starts, it's only going to accelerate and it's going to become more of an ongoing theme. And when you're an investor, when you're a capital allocator, you need to decide where does your marginal dollar go in that environment. And you see ExxonMobil basically having these big pullbacks in these energy names. You look at the tech stocks having significant runs. Suddenly it actually makes sense to a certain extent to go in that other direction and start to think about maybe more of a return toward the toward the energy side. I also point out that ExxonMobil has held a 50% retracement of its move from the start of this year to its high. So all those things kind of coming into focus with earnings here. I want to also very quickly also, gold and gold miners here are potentially setting up for a lot of space to the downside. And I think when we look at the situation of rates potentially moving higher, yields, moving higher, the dollar holding and potentially pushing higher, those things coming together here with gold and the gold miners, GDX, that's, I think, something else people might want to see some potential kind of pretty attractive downside on some put spreads.
Yeah, gold
Yeah,
in
go.
the context of, heading into an earnings season too, where we're focusing on guidance and growth. I mean, gold can't be exactly the happiest place when earnings
Exactly.
are growing that way, right?
That's another point. I mean, basically, the gold miners have not made a new high since the end of January. And I just go by some good old fashioned, kind of trusting the chart. And if the S&P is making highs and gold is not, that tells you something. And so I think here we're in a spot where, we had this massive selling in the dollar last year, and a lot of the ingredients for dollar weakness. No one expected that we'd have a situation of what's happening with energy. And ultimately, most foreign countries that have driven the global rally are massively dependent on the Persian Gulf. Not all of them. I mean, you have countries like Brazil that are not, but you have South Korea, which is a huge part of what's happening with global and emerging markets because with Samsung, it has SKX Hynix, right? So it has these massive AI chip names. South Korea is totally dependent on Persian Gulf oil. Japan, Europe. I mean, these are big chunks of the global kind of index. So I think right here, the weak dollar trade that we saw last year, there were reasons to kind of see some continuation of it this year. I think especially with the expectations of the Fed being, more dovish, but this energy environment throws a huge monkey wrench in that. And now we're in a spot where the American economy, being more of an energy producer, is more attractive potentially. And some of these global markets look a lot more shaky. And I think as people start to hear about energy shortages in East Asia and things like that, that only intensifies and it kind of raises the potential for the United States to outperform, and it raises the potential for energy to kind of, lead, and it really increases the risk on some of the global trade.
So, David, we know that we have a really important earnings week here this week with Microsoft, Meta, Amazon, Google. Later in the season, though, I feel like we, always kind of forget that Nvidia isn't like later until like it's probably going to be the middle of May or even early May.
May 20th.
What do you think? Maybe end of May even. As we're focused on some of these other big cap names here, what about Nvidia into this earnings season?
Well, my sense here is, we have, what is it, May 20th, I think. So we have a few
Okay.
weeks. It's had a
Yeah.
very sharp move here. And I think at this point, as long as nothing gets very much out of control in terms of the Middle East, I'm essentially looking for the S&P to hold 70-50. And I'm looking for this kind of range here, some consolidation. And my expectation would be that the strength that we're seeing in chips and NVIDIA, has the potential to continue toward that earnings report. We've had some really strong moves the last even few days. So I think some consolidation here with the Fed and everything else throughout this week is entirely possible. But my sense is that we still have, this semiconductor trade. There's a lot in it that I think it's gonna be hard to kind of knock down. And I would say is that, yeah, OpenAI might have, weak revenue, but I think there's a lot of evidence that OpenAI has been kind of losing market share to Anthropic for the last few months here.
Sure.
So the fact is, I'm not really sure OpenAI is the leading AI stock or AI company, so to speak, anymore. I mean, there's other things happening in the world here of AI. So I think, this headline today is a little bit of a, the sort of thing that makes people take profits after a run. But my expectation here is essentially that the semiconductors and the overall hardware sort of theme, have the odds to remain intact going into that Nvidia report. However, in the next few days, especially with what's happening in energy and the Fed meeting, you put those things in there. In my sense is that the next 2, 3, 4 days, there's going to be some opportunities to get these names at lower prices.
Let's and I completely agree with you. Just to recap what you were saying, I was thinking this, like, is OpenAI really the player here that we want to gauge? I think it's Anthropic now that is taking a lot of market share. So if they have concerns with their revenues not being, it could be a little bit that maybe the AI trade isn't dying as much as Anthropic's eating their lunch. So I mean that's something to consider here too. With this morning's headline, everybody's just hammering semiconductors, goes, oh my gosh, the AI is a bubble that's about to burst. Continuing on with the tech theme, we've heard about this SpaceX IPO we've been talking about on this show for basically the last 2 months. We haven't seen the S1 drop here yet, but we think, they're shooting for a June or July, IPO here, which means they're going to have to drop the S1 pretty soon. How are you playing, looking, and not just SpaceX. We could get Anthropic later this year. We could even get OpenAI, who knows?
Discord.
What do you think, David? Like, do you think we're going to get these IPOs, and how are you playing it?
I'm not sure how to speculate on something with the IPOs. My sense would be that the real beneficiaries are likely to be some of the investment banks. I think Goldman Sachs and Morgan Stanley here have had some real strength. And you guys were talking about the value trade overall earlier, and I think it's interesting to see those. And I've been very much interested in Morgan Stanley and Goldman here. So I'm not really sure how to judge the IPO market. I look at something like SpaceX, and honestly, to me, it seems like a classic long duration. This is, in my view, the sort of thing that will struggle because we're talking about things that trade at massive valuations, and they are essentially, I guess you'd call it a service. I mean, it's like it's selling, and it's likely to be valued at a very high level. So, I mean, from my perspective, the IPOs themselves, very well could struggle, especially if we're in an environment with, higher rates or in overall economics, or an energy squeeze. So from my view, I think the cleaner way to do it is to look at kind of the investment banks that will benefit. And I also think that, a lot of these space names, these are small kind of random companies. There have been some space stocks that have been running recently, like Lunar and some of these others. But these are also very high multiple stocks here. So I think we have to be careful here of some of the high multiple stocks that that are not making hardware. I think it's very interesting to look at, the names like, SanDisk and Micron that make hard items, like actual physical items that are being used in physical applications. But I think we're in a massive, new paradigm here of long duration service related names, for the most part, I think are facing, some risks here. And I think that's a new trend that we're going to see going forward. I think that the high multiple long duration trade that we've seen really, for the last decade or so, that I think is kind of ending permanently. I would I think, and we're entering a period here, I think, of a new kind of hardware cycle, and we're probably about a third to a half of the way through it. But the fact is that those names, the SpaceX and this thing, it falls more under long duration service providing and not short duration hard asset capital sort of investment.
Sure. Dave Russell, head of market strategy over at TradeStation, joining us here this morning with a handful of trading ideas, a few little nice tidbits, words of wisdom. Thanks for joining us here this morning on this Tuesday, David.
It was great to talk to you guys. Have a good one.
All right, later. All right, Triple D, we teased before a trade idea that Mitch got on your radar. You're kind of interested in it. Let's go to it here now. I'll pull up the chart and hold your jaws, folks.
Yeah, we got a trade idea here.
It is a software name.
It's kind of a pitch. It's kind of a pitch. I don't own it here yet. I'm thinking about buying it today, so I'm pitching it before I actually take the position on it. But I'm looking at Fastly here, and Money Mitch is the one that actually pitched this to me just on Twitter. So I'll just go through,
tell us the scenario, because
so yesterday I retweeted Unusual Whales, great follow on Twitter. Unusual Whales tweets out, over half of the planet's internet traffic is now made up of AI bots per Lumen Technologies. I tweeted with that. I said it's half. I said this will go to 99%. I firmly believe that 99% of the internet's traffic in the future will be made up of AI bots. I think it's just people are going to be scraping information from everywhere. So if it's half right now, I think it's going to be the majority of internet traffic is actually going to go to AI agents.
And
you just think about how you think about it's like exponential population growth to a certain extent.
Exactly.
And like we can't, and it doesn't, it just costs energy. So I mean, like I think about, us, we have a bunch of agents working for us, AI agents. The other person, my wife's cousin was over on the weekend and he's like building stuff and he's like, I'm like he's like, I just feel like I can't build fast enough. I have to create more agents.
It's
Crazy.
Crazy.
So many people and software engineers, agents. These agents are all just scraping continuously and they can scrape so much faster than us. Like we're surfing, looking at a page.
Yeah.
They're pinging everywhere. They're just like an agent can just like be everywhere, like just pinging like
exactly
just everywhere. So much traffic.
Let me make the disclaimer here. That's not because humans will be on the internet less. It's because the rate of AI agents going out there and doing stuff on their own is only going to increase. So, Dennis is not saying that this is some concern for like humanity or something like that. It's like, this is the pace that we're going at. This is the direction that we're going for it to be 99% of the internet traffic, which I agree with you on that, Dennis.
Yeah. So Money Mitch, when I said that the 99% thing, Money Mitch says this will benefit Fastly. Money Mitch is all over, like he knows how it's all connected. He's good at this stuff here. I don't know if you're listening to Money Mitch. I know you do. Like you obviously get busy too in the mornings there, but I'm gonna have Money Mitch, give his arguments in the STN think tank tonight. I'm gonna ask him for Fastly here. I love this idea. I know it's up a long ways. Like, that's the one concern here is, it's up a long ways. Let's talk the technicals in a second here, though. Just continuing on the fundies here. So I went further and I'm like, okay, like, let's just jump into Fastly. Like, if we have so much compute and, and obviously, we have so many agents just flying around the internet, who simplifies that? It's Fastly. So, I'm asking Gemini, I'm like, how does this work? It's a think about Fastly. It's from Gemini. Think about Fastly as a global network of high-speed buffer stations for the internet. It absolutely makes the internet run faster for the user. Here's the simplest way to look at it. One, this is from Gemini, it shortens the distance. Normally, if a website's computer server is in New York and you're in London, your data has to travel across the ocean. Fastly places copies of that website in edge servers all over the world. When you click a link, you're getting the data from a server in London instead of New York. Less travel time equals faster loading. That is cool. I didn't know this until Gemini told me about it. Yeah, it does the thinking closer to you. Instead of sending every request all the way back to the company's head office, Fastly servers can handle small tasks like checking if you're logged in right there at the edge. And then number three, the big thing that Gemini says, it clears traffic jams. When a huge news story breaks or a video game launches, millions of people hit the website all at once. Fastly acts like a massive relief valve, handling the surge of traffic so the main website doesn't crash or slow to a crawl. In short, it doesn't speed up your home Wi-Fi, but it makes the destinations you visit respond much quicker. I was like, that sounds like awesome. And I think about where we're heading with AI agents just clogging everything up and making traffic jams everywhere. Fastly fixes this stuff. So I think, just, talking out loud here and thinking, and I haven't taken a position in it yet here. I think Mitch is right. I think there's a play here where, you look at a stock like Fastly, not cheap by any means, trading like 80 times forward earnings here. But, that growth potential is there. This was a stock in 2020. It was $140 a share. It has been beat up and hit. And you know what really put it on the radar for me? That one day that Fastly was down and the internet wasn't working worth a damn. You remember that day? Yeah. This is like, backbone of like making the internet more efficient here. And I don't think any of this is going away. So I actually like Fastly here. I know it's hard because the stock's up. I just got done saying I don't like buying stocks that are up 100% or 150% this year. But I do think this is one on dips. I always like to buy on dips that, I'd consider putting in my long-term investment account. I also was asking a little bit further, like what other companies do this. Cloudflare is one that comes in there too. They're also cybersecurity, obviously, but Cloudflare also benefits and does similar stuff here. So NET, which is not a cheap stock either, but these are two that make the internet run more efficient. So Cloudflare and Fastly, both, probably benefit as AI agent traffic increases.
Well, if Fastly is trading at 70 or 80 times, I see almost 200 times for Cloudflare. I haven't confirmed that or
Yeah, and I
anything,
mean,
but
can their earnings grow? You know, there is a valuation issue. You're not getting all the ducks in a row because you're not like getting these stocks, you know, at ridiculously cheap multiples here. I think if people were ahead of it and you were picking up Fastly at 10 or 11 bucks, you know, earlier this year or late last year, you know, now you're kind of laughing. But I mean, at 25, do we get it back at 10? Does it eventually pull back? Does, you know, this, you know, OpenAI headlines and the worries here bring us back down to $10 to $15? I don't think so. I don't know if you're going to get it back there anytime soon. So I want to see what Money Mitch says here, you know, about this tonight. We'll have him. I'll message him and maybe have him do a full pitch here. But it was his idea originally. I want to hear what his thoughts are on this as well. But that's quick Gemini. So, you know, I don't often pitch stocks here on the show. You know, official pitches here. Nothing's an official pitch.
I don't know if it was like a
informational
pitch.
purposes. We're not recommending. We don't do stock recommendations or anything like that. I'm just saying I'm thinking about adding this to my long-term portfolio for the reasons that I just outlined.
And I have the rubric chart on screen here because Carmen in the pre-market prep chat, she's a STN user saying think of rubric in the same vein. So we got a little research to do here.
Let's dig deeper in the STN think tank here. And I mean, that's why if people say, "Oh, I don't want to pay 179 bucks a month," you know, for the thing. I mean, you get one trade. You know, you pay for that. Like we're putting all minds together in here, and you know, I wish we could just have everything for free. You know, I wish we could just together. Like, you know, provide everything for free, and maybe it goes to that. Maybe we can get enough sponsors and we can actually open up everything and just go for free. But you know, we now employ you know, at least on a part-time basis. I think there's 10 or 11 people here. We have expenses here. So I mean, you know, we're not like making a killing on this room and paying. We're literally are just covering our expenses. So I mean, that's why. You know, like this show has a sponsor. TradeStation's great. It helps us, you know, to keep this show free for you. Maybe we can eventually get more sponsorships and eventually open these up. But I just look like, you know, if I had a room, like if I could have started my trading career and had a room to go into with, you know, all these professional traders thinking out loud in a room and giving you ideas, I would pay $179 for that all day. You know, like, so I know people don't want to pay for anything in this information age, though. We've learned that the hard way. It's like, no, they don't want to pay anything. They don't want to pay $5, like nothing, zero.
$5 measly dollars.
They don't want to pay it. People do not want to pay because they think they can find good information elsewhere. The one thing I do different, though, is I post my monthly results every month. So you can see I'm actually making money every month. I don't know. Christian Frommertz does that too. I don't know a lot of other traders that do that. So you can join these rooms and they tell you how much money they're making. I publicly post it on Twitter every single month. Christian Frommertz does too. Fantastic job, Christian. You always do as well. So, I mean, that's where we're at.
Great STN user here on screen right now. The STN room is a huge brain trust. We're trying to get all the smartest investors in one room, folks, sharing ideas, educating each other, helping each other learn, giving some validation. Call me crazy, but making friends, even having some fun, being entertained. That's what it's about, folks. Triple D, let's do one rating here real quick. You ready?
Yeah.
It's AMD. What happens with AMD? DA Davidson.
No, it's not.
No?
No, unfortunately. It's Micron.
Oh, wait. That's
what AMD was yesterday.
Oh, not AMD.
Did I write AMD to you? It's
no,
Micron. Sorry. I set you up for failure if I wrote that.
No, I did.
Davidson
Thank you.
Initiated. And we could talk AMD too, because AMD is getting hammered here again. I have that in my long-term portfolio, but 2 ugly days here for it. But Micron here, which I have a swing trade long on here right now, gets initiated at DA Davidson with a $1,000 price target. That's not a bull scenario. That's their price target here. So we got DA Davidson, Gil Luria initiates with a buy and a $1,000 price target. The analyst comments, we believe artificial intelligence is creating a longer than usual memory cycle as compute deployment and demand generation exist in a positive feedback loop, creating a structurally higher ceiling for memory pricing and demand. The market is still framing the cycle through the lens of prior downturns, which appears to underestimate the demand environment, especially relative to the rest of the semi-complex. Combined with Micron's node leadership and what we see as a long-duration earnings power story, we see meaningful upside to shares, initiating with a buy rating and a $1,000 price target. Thank you, Street Insider, for the color. This is, a stock that I've got right now. Obviously, it's getting hammered here today with every other stock in the chip rack here that is going on here right now. But, this rating flying under the radar. Maybe it was the wrong day. to do this. These stocks have run a long ways. You obviously have to have them on a tight leash. But SanDisk and Micron had fantastic days yesterday, both making new 52-week and all-time highs. We're pulling back. Is the dip this morning, an opportunity to get back into Micron and SanDisk? D.A. Davidson believes it is.
And we should just mention Seagate will be having their results tomorrow night. Is it tonight?
Yeah, Seagate is tonight, actually.
Tonight, actually.
So, I mean, that is another wild child. So we've also seen, like Rambus got hit, Celestica got hit, GLW got hit. Now we go right to, in the Seagate. And STX has been flying and making new all-time highs the last couple of days as well. It's run a long way, from 350 to 595. Huge bar. Do we see a sell-off ahead of it where people are ringing the register? Probably. We'll see, though. It doesn't, just because every stock sold off today doesn't mean they're all going to sell off, tonight too. Sometimes that trade gets crowded as well. It's like, oh, they're just going to hit it because it has a high bar. We'll see. STX, if there's anything that can get over that high bar, it's going to be Seagate. We'll talk about that later on the STN Think Tank as well, what we're doing, with our Micron swing, and also, how we approach Seagate's earnings tonight.
Tuesday. And Tuesdays on STN mean Trading Edge with Trader Prad. He comes up at 1 p.m., 1 to 2 p.m. And then what Triple D was just alluding to right there, Dennis and I do a show from 3:30 p.m. to 5 p.m. Eastern time where we're setting up into the close, and then we're breaking news after the close. Come check us out. And then we already mentioned Money Mitch's show, How to Swing Trade with Money Mitch. That's 7:30 p.m. Eastern time on the Stock Trader Network. We're going to wrap it here for today. Thanks for a good show. Pre-market prep chat. Much love. Good luck.